For decades, I, like markets, policymakers, and the public, believed stability was the norm. I thought economic growth was predictable. I assumed inflation could be managed. I accepted that credit flowed freely. I took employment steadiness for granted. From my perspective, stock markets climbed, governments spent, and central banks intervened when needed. It all looked resilient, solid, unshakable, and reliable. But I learned that appearances can be deceiving. Beneath the surface, I realized imbalances were accumulating. I watched debt grow faster than income. I saw asset prices rise detached from fundamentals. I noticed monetary and fiscal interventions being stretched to their limits. I felt confidence becoming a fragile construct. I realized the very mechanisms that created stability were also sowing the seeds of fragility. The illusion of stability convinced me and others that risk was minimal. I observed investors taking on leverage. I watched corporations borrow aggressively. I saw governments expand deficits. For decades, markets, policymakers, and the public believed in stability. Economic growth felt predictable. Inflation seemed managed. Credit flowed freely, and employment looked steady. Stock markets climb, governments spend, and central banks intervene when needed. From the outside, RE-system appeared resilient, solid, unshakable, and reliable. But appearances can be deceiving. Beneath the surface, I saw imbalances quietly accumulate. Debt often grew faster than income, and asset prices rose detached from fundamentals. Monetary and fiscal interventions began to stretch their limits. I realized that confidence was a fragile construct. I understood that the very mechanisms that created stability also sowed the seeds of fragility. The illusion of stability was powerful because it convinced me and others that risk was minimal. Investors took on leverage, corporations borrowed aggressively, governments expanded deficits, and consumers spent beyond their means. Each action reinforced my belief in safety and made the system more dependent on continued growth and policy support. I know economic systems are inherently cyclical. In my experience, booms and busts follow one another. What looks stable in expansion often becomes precarious in contraction. Stability is rarely permanent. It is a temporary state maintained by a delicate balance of confidence, liquidity, and incentives. I watch credit markets closely. When borrowing is cheap and abundant, I see corporations and households expand spending. I watch asset prices rise and banks lend more. I watch confidence grow and policymakers celebrate growth as proof of system strength. But I know hidden within this expansion is exposure to shocks such as interest rate rises, asset price corrections, or liquidity constraints. A small disruption can propagate rapidly, revealing how fragile stability truly was. I see the illusion compounded by central bank interventions. Quantitative easing, low interest rates, and liquidity backstops create the perception that crises can be prevented. I observe market participants assuming that support will always be forthcoming. Moral hazard grow and risk-taking increase. I notice each intervention reinforces dependency while delaying the adjustments needed to restore real resilience. I see globalization adds another layer of complexity. I watch interconnected economies magnify stability in good times and amplify shocks in bad times. I know a banking crisis in one nation can ripple across continents. I have seen supply chain disruptions affect production worldwide. I observe capital flows accelerate or retreat. shaping markets thousands of miles away. I understand stability is no longer local but systemic, and therefore more vulnerable to collective stress. I notice political narratives further strengthen the illusion. I hear leaders emphasize control, resilience, and economic competence. I read reports that highlight growth and employment while downplaying vulnerabilities. I see confidence, both perceived and actual, become a tool of governance. I realize citizens and investors may trust the system because it appears trustworthy even as hidden imbalances grow. I acknowledge that technological innovation has also contributed. I see advanced financial models and real-time analytics make it feel like risks are understood and managed. I know those models rest on assumptions, past patterns, and the data we have. I recognize that unforeseen shocks, black swans, or systemic feedback loops can make models fail. I worry that the more sophisticated the technology, the more it can breed complacency by hiding underlying fragility. I believe the illusion of stability is especially dangerous because it reinforces itself. I see that when we believe a system is strong, we act in ways that increase exposure. I watch leverage expand, speculative bets multiply, and our risk tolerance rise. I realize the confidence that creates stability can also trigger instability. I draw warnings from historical examples of expansions that seemed unshakable but ended in dramatic reversals. I remember the roaring 20s that led to the Great Depression. I recall Japan's asset bubble collapsing after decades of perceived stability. I remember how the 2000s housing boom ended in a global financial crisis. I've seen each episode follow a familiar pattern: confidence, imbalances, intervention, and the eventual revelation that stability was mostly an illusion. I believe understanding that illusion is essential for navigating modern finance. To me, real stability is not the absence of crises, but the presence of resilience. I look for systems that can absorb shocks without catastrophic failure. I value flexibility, prudent leverage management, and a clear recognition of the limits of intervention. As an investor, I focus on being aware of hidden risks. I prioritize diversification, disciplined risk management, and scrutiny of systemic exposures. As a policy observer, I want policymakers to balance growth with prudence and acknowledge real constraints. I expect them to prepare for the rebalancing that happens when imbalances become unsustainable. Ultimately, I see the illusion of stability as a reminder that appearances can be deceptive. I know that what seems certain today may unravel tomorrow. I recognize that beneath calm markets, fragile structures may persist. Only careful observation, historical perspective, and disciplined analysis let me distinguish genuine resilience from mere perception. I know that in finance, as in life, stability without substance is fleeting. Understanding the illusion is my first step to anticipating the next crisis before it arrives. Welcome to Cash and Chronicles, where money, power, and history collide.